This is the Mobile Home Park Lawyer Podcast with Ferd Neiman. If you're looking to generate wealth and passive income in the lucrative world of mobile home parks, you're in the right place. You'll discover solutions to the common legal and operational pitfalls and how to optimize parks to maximize income. Your host is in the trenches. He's a real estate attorney, financial analyst, and mobile home park investor and operator. Now, let's turn it over to Ferd Neiman.
Welcome back, Mobile Home Park Nation. Ferd Neiman here again today with another episode of the Mobile Home Park Lawyer Podcast. Got another great guest for you today. Guy's a real estate investor, master fundraiser, MHP guru, graded financial engineering. Really excited to have you meet my guest here today. Please help me welcome Mathew Owens. Matt, thanks for coming, man.
Thanks, man. I appreciate it. Excited about this.
Well, we've been trying to do this for a while, so glad we can get this episode done here today with both of our schedules. But tell us a little bit more about your background for those that don't know you, and then we'll jump in.
Absolutely, man. Thanks so much. So I'm a CPA. I've quit my CPA firm job in 2006, right before the real estate crash. So I was a real estate genius for about a year and a half before I got my ass handed to me and punched in the face by the market crash, of course, in 2008. Since then, we've actually flipped a little bit over 1,000 houses now. We have over 35 million lent out to flippers in different markets around the country. I invest in a lot of different debt instruments as well as equity in properties, mobile home parks, multifamily, self-storage, single families, short-term rentals, all different types of strategies, along with different types of debt instruments, whether that's lending on mobile homes, lending to flippers, or accounts receivable financing. All that different type of stuff is what I really love doing, and I've raised a little bit over 150 million now for real estate transactions over the last 18 plus years doing this, and teach other people how to raise capital in these different strategies to show them this, especially when they're working with us in a fund to funds model or different strategies like that. So it's a lot more fun than doing accounting work for a CPA firm. I got a 6-year-old and a 9-year-old as well. So my son beats me up physically and my daughter beats me up emotionally. So it's a lot of fun, dealing with them consistently and talking to them about entrepreneurship, so.
Yeah, you're definitely an entrepreneur at heart. I know it for sure. So, I mean, of all those different property types, is there one type of property that you no longer want to mess with? You're like, yeah, that's not worth it. Either it's not as profitable, but it's still a little profitable, or like, no, it's a loser. Because I mean, you've touched a lot of different stuff. Some others that you didn't even mention in your intro. I know.
So I still do single family homes and have portfolios of homes like this. I'm not really acquiring anymore. I've kind of graduated to a higher level where we're doing, unless I'm buying a portfolio of these things, or if it's a lot more efficient for me to buy multifamilies and mobile home parks and different strategies like that on the property side, right? When it comes to single family homes, they're great for the starter investments, to start building a portfolio. I'm in the personal belief that if you're investing in syndications or properties, or investing in different strategies, you should invest in some syndications where you're diversified into different asset classes, different markets of the country, and different operators that do those different asset classes. But also you should have your own portfolio of direct owned properties, whether that's single families or fourplexes or some smaller multifamilies or whatever you can afford on that, to have those in place that you can make direct decisions on, and you have a set cash flow stream coming in from there. Because the wealth building on the long-term effects of this is massive at the end of the day. When you look at, the tax benefits, the appreciation benefits, the principal reduction on the loans, the inflation hedges that these, types of assets account for. So I really believe in a proper structured investment plan. I even go to invest in gold and silver because I want an insurance policy and, commodities and stuff like that, because, what happens if real estate goes down? I also look at the lending side because I get a consistent cash flow stream from the lending versus the value add and the tax benefits and everything that goes with, property investing over here. So.
No, I think it's great, a diversified plan. Yeah, I know, I agree with that. And one thing that I've told people when they get started is like, don't outsource everything. Learn how to do it. I've sold a mobile home. I've renovated. I've painted a mobile home. I've poured concrete. I've put in driveways. I don't want to put more driveways in. I don't want to drive the loader again. I certainly don't want to paint or put on a roof or anything like that. But like knowing how to do it helps a little bit. And then knowing how to do your books, knowing how to do your diligence, knowing how to, make offers, talk to sell. I don't feel like cold calling anymore, but
Right.
I've done it. So then I kind of have a good feel. And then you get some wins, you get some refinances, get some sales, get some liquidity. But then it's like, okay, now I'm going to diversify. Got some money in storage. I got some money in restaurants, some money in solar. I got some money in apartments. But like my bread and butter is MH, and
Right.
but sometimes I can't find enough deals at the moment, so I want maybe diversify a little bit. Sometimes I don't have enough money for the deal, and I got to syndicate. So it's kind of try to balance those and see the future best you can. But I think it's generally a wise approach.
I'd have to agree 100%. When you look at, and this is something a lot of people don't talk about, is the importance of having active operations knowledge when you're investing, right? Actually going through and buying that rental property, that mobile home park yourself, and being able to renovate it, tenant it, manage it, get it sold if you need to get it sold, get it financed. All those pieces of this are super important from a knowledge standpoint, so you know the right ways to manage assets when you're investing with other people too. How do you know what questions to ask if you're investing with other operators, if you're not doing it yourself and seeing how hard that is? Everything that goes into renovations, there's like a step-by-step guide for doing this that we kind of developed when we're dealing with a bunch of single family homes when we're flipping 5 to 10 houses a month. Just the renovation alone is a major process that needs checks and balances and risk mitigation, all that stuff. So you learning through that process makes you much more, I'll say, an astute investor when you're investing with other people, because you know what questions to ask and what makes an efficient operator and what doesn't.
Yeah, I'm curious. I'm going to hang on that point for a minute on the rehab because I don't do single family homes at this point. I have did in the past, but not at this near the scale you have. But we renovate a lot of mobile homes, and sometimes we use third party pros, and then it's somewhat easy. You get a bid, you get a scope of work, they finish it, you pay them. They don't, you don't, kind of thing. But we also manage. We got about 10, 12 guys at any one time in house that are doing renovations, and it's all the time, and it's all over the place, and it's challenging at times. So I'm curious, is there a certain tip you've got for like a tool, like a tech, a Monday.com or a Slack or something, and or what do you have specific SOPs or checklists? What's your special sauce, if you will, to keep all those renovations going up to stuff?
So the first thing that, it becomes very difficult when you have all these units all over the place getting renovated in different states, different team members involved and things like that, right? It gets really, really stressful because there's always fires too. It's not like a rehab goes as planned ever. So there's always something that has to change, or someone you're waiting on, or the city problem, or, some issue with utilities or something like that, right? And so at the end of the day, it starts off with your process and having all your ducks in a row from the start and getting proper documentation. So, if you're going to go in and renovate a mobile home park that needs 30 units that need renovation, for example, or something like that, or 50 or a couple hundred in some cases, right? How do you actually tackle that bear? The first piece is you start planning from the start. You're like, okay, let me go get all my pictures and estimates and videos up front of every unit that needs renovation, including the process that goes through. Do you go through demo all of them first? Do you go through and do sections at a time where you're saying, we're going to tackle these 10, then these 10, and these 10 based on how big of a job that is? Because you're going to come in and you're going to say, hey, okay, how do I know which ones to start first? You got to start with the easy ones, get those up and running and rented because they start, producing revenue right away. But having that process up front where it's documented, you're saying, what are the steps I have to do before renovation? You have utilities, you have permits, you have rehab bids, you have pictures, you have clear communication, you have who's the contractors going to be on that job and can they actually do that many units at the same time, and then having an outside partner or team member that's outside of that contractor coming in and doing checks and balances each time, like little mini inspections every single time they finish a unit. For example, you have them do an inspection, do a walkthrough of punch lists, and you have your proper quality control on the back end to make sure that you're being efficient. If you don't have that quality control on the back end, you're going to find so many problems and your jobs are never going to get completed because there's always another punch list. I don't know how many times we've gone through and given the contractor punch list and you have 20 items they got to go clean up and they should have done already, and they go fix 5 or they go fix
Right.
10, and you're like, do I
Wow.
really have to go put blue tape on the exact spots that we told you about already? And so we started doing side-by-side pictures of everything in our inspections and saying, you need to give me a picture of every one of these items that are done, and then give us that documentation back, and training the contractors and the project managers on top of that what documentation we need back that we need to review, and what specific things to get, right? Do we need lien waivers? Do we need permits pulled? Do we need final sign-offs from city? Do we need utility inspections done? Having a list, we use Monday.com for this significantly, which is great because it gives us a reoccurring checklist we can use on every single house or every project. But these are the things that are most important to be as efficient as you can, is that process. And even the pre-rehab process, before you can even get started, it starts with the planning of the timing of everything that's going to occur.
No, that's great. I mean, yeah, the pictures and documentation is key, because we've had problems in the past where the guy will tell me, "Hey, I painted the room," and he'll take a picture, and he looks like he painted the room, but you didn't know at that time that the wall behind him was not painted. So like, okay, we learned. Do I need to get a picture of every wall? Yes. Do I need to get a video? Even better, right? And
Right.
then cutting corners. Oh, contractors drive me nuts on that kind of stuff. So it's great you can figure out processes. Now on the Monday.com, we use that internally. Are you having your third party vendors use that as well and requiring them to become proficient in that? Or are these guys that are like generally on the payroll?
So we have our project managers on Monday.com. We don't have the direct contractors on there because the
Yeah.
project managers are responsible for getting us our documentation and getting it from the contractors in the first place. Because, if you guys, most people don't understand contractors, but most of them are not proficient with, taking quality pictures, getting them uploaded to you,
Right.
taking all sides of the room and getting the right angles of these pictures so that you're not just looking at one wall and can't see the room or anything that's going on, right? And a lot of them are not good with emails and, billing and that kind of stuff. To keep contractors on point with billing is a major component of this, because they may give you a bid and not realize they spent 3/4 of it and still have half the job left and they're over budget, on their project. Most of the contractors are not great at keeping proper documentation on what they spent and not spent. So having that project manager involved is the key, and having them in Monday.com from a tracking component and a checklist component is how we structure it.
Yeah, no, I agree. That all sounds great. One challenge we've had with contractors is, anybody who's skilled in labor and can run the business side is probably already running a successful company. What we
Right.
find a lot of them do is they're skilled at labor, they can fix or do anything, and they come in, they tell you it's going to be 10,000. They even bid 10,000, and you're like, wow, this is a great deal. This is a $20,000 project. They
Right.
figure it out halfway through when they realize they're going to lose a bunch of money. So it's like, okay, we don't want them to run out of business, go out of business either. So trying to like come up with some win-win pricing. And the other problem a lot of these guys have is they don't have the money to go buy materials up front. So they want you to
Right.
buy the materials, but then it's like, then I've had materials walk off the job, right? So kind of a continual balance of trying to, work with the same guys over and over, because instead of having to retrain or
Right.
hire fire over and over.
Contractors are the bane of my existence when it comes to this stuff, because we dealt with the same exact things across the board. And really sitting down with those contractors up front when they give you a bid for something and saying, hey, let's price out the materials first. Then you tell me what the labor is going to cost for this, and we'll come up with an accurate bid, and we'll document, hey, how many guys do you have at this job? For how long are you saying that it's going to take to do the drywall, and how many guys? What are you paying them on a weekly basis? Sometimes they pay them weekly, sometimes they pay them hourly. It just depends on how they pay. But breaking the math down for them on an Excel sheet so that that's done and that they're not underbidding the job is so important. You have so many deals where you have massive renovations where they might do the full outside and come up with the bids for the mechanical and all that stuff, and for the MEPs, and then realize, wow, they have hardly anything left for the finish work at the end of the day. And that's where you find out where your budget overruns are, is at that point when those major pieces are completed already. And then you're going, wait, we only got 10 grand left for cabinets and fixtures and everything else on this project.
Mhm.
So maybe not a mobile home park. That's a little or mobile home.
Yeah,
That's a
a
little
little
different
smaller scope, but
pricing,
no,
right? So
absolutely. I jokingly say we're in the property management business, but a lot of times I feel like I'm in a construction company because it's such
right.
a crucial part of the, park-owned homes and renovations and rehabs and infill and all that. Well,
Absolutely.
let's talk finance for a minute. I know that's your real expertise. Obviously, you're knowledgeable in construction and project management, but I call it financial engineering. We're Excel wizards, and not just the formulas, but actually the assumptions and the inputs. So tell us about how you structure deals. I mean, from like I know something as unique as you're raising money for park-owned home infill and rehabs. separate than the syndication for the acquisition. So you've got kind of a fund to funds model that allows you to raise money, but others to raise money for you and to do it, which is important to me and important to you legally within the SEC confines, which is not always how people do it, but you're on top of that. So maybe tell us a little bit about that type of model and how that's been helpful for you guys.
So I think this is probably one of my superpowers is financial modeling. I have two 47-inch wide monitors behind me just for financial modeling. And it's like the CPA's dream, have these giant monitors for Excel. And it really comes down to understanding the incentives involved and how you can partner with other people, right? I can go out and on all of my deals, I have one share class for people that invest under $1 million and one share class for people that invest above $1 million. And that only, and usually the ones that invest above $1 million, they're making more money, of course, than the ones
Get the better deal.
underneath because of that incentive for performance or that incentive for putting more capital in. And what that allows, though, is it allows other partners to come in and create what's called a fund of funds to be able to set up a fund that invests into your fund specifically, and then that way it allows them, say, $1 million, then they raise $1 million for you for your project, and they put it in their own fund from their own investors, and it allows them to make a spread of profits based on the profits of the deal as a whole. So, for example, in one fund, someone might make a 10% interest rate for investing under $1 million, but 13 to 14 for investing over $1 million, for example, and that creates a 4% spread involved in that in profit spread. And so that's how you structure these, but you also want to look at, does this financial model work from one on the operation side, right? How is it structured? What's the operational workload involved? A lot of people look at these financial modelings and they say, okay, yeah, this all works great. I have, income and expenses, but they forgot about the excess labor on top of this, right? They forgot about the servicing component of this or the extra work that has to go into managing this stuff on the asset management side and things like that. So you really want to make sure that you're looking at all components and not just incentive for capital raise, but incentive for performance as well, right? Having preferred returns involved in your structures, having waterfalls involved where most of the performance and the profits for the general partner gets paid on the back end of these investments and not right up front, and a major disincentive for getting a bunch of money up front, which we see sometimes in syndications, people being paid massive fees instead of those incentives for performance on the back end of these, which is the most important thing I look at before I'm investing. And we go through like a 200-point due diligence checklist when we're investing with these different operators in different ways. And we also look at that with our own investors to try to piece that together and make sure our investors see those questions as regard to us when we're raising that really, really help massively from a due diligence perspective and operational efficiencies perspective. So.
Yeah, no, I want to highlight too, when you talk about the fund to funds model, what you're doing is you're allowing somebody, let's say it was me, let's say you're raising 10 million and I say, hey, I can bring $1 million, but it's not actually my million. It's 20 guys bringing me 50. To
Right.
you, it's $1 million, but I want to get paid. You can't pay me a fee to raise money. That's called a
Right.
money finding fee. That is, verbatim prohibited under the SEC. We both get in trouble. So we don't want to do that. But if I can say, hey guys, I have access to this investment. It's with Matt. I've vetted Matt. I blah, blah, blah. I know the deal. Here's the deal. You only have 50. You have 50. You have 50. If you went direct, you're going to get the lower class of shares. But if we all come together, we get which through my management and my sourcing, we're going to get the better split. And then I'm going to take a piece of the gravy. So if there's a 4% gravy, I might take one for my services for being a fund to fund. So that's just generally how you can do it legally. And then another point that is important there is, be cognizant of the fees, because what I've seen some fund to funds guys where in this example, I'm the fund to funds guy, but if I'm charging upfront fees and I'm giving money to you and you're charging upfront fees, the end dollar going to the investor is got a big haircut and another haircut right out of the gate. And it's
Right.
really hard to overcome that. So as an LP and, my LPs and I'm an LP to you, I need to be cognizant of that. And then, as a GP, which I do, so to speak, for my day job, I like to be able to get paid more like anybody, right? But how do I do that? I say lower fees in the front end if I perform. If and when
Right.
I perform, I get a bigger slice, typically a bigger promote on the back end. And then you have the alignment of incentives, which you don't often see. I mean, you see it, not that you or I are the only good apples out there, but there's a mix of good apples and bad apples. So
Absolutely.
important
And
to
I
fully
I want
understand.
to stress the importance here of understanding the investors that invest in a fund of funds into your deal, those investors should be making the same, if not a little bit more, than investing directly into your fund in itself, so that they're not having a disservice. And keep in mind, there is a need for some fees. There's just a matter of reasonable fees, because you have to cover legal fees. You have to cover some marketing costs, some due diligence costs. Otherwise, they're going to be out of pocket for those costs. It's a matter of how much of a load that is compared to the capital that's raised as a whole, right? If it's less than a couple of percent, then you're usually in a great spot from a fee structure standpoint, just making sure it's reasonable versus 5% or more in some cases where they're just killing it in fees, which really is just not what market, dictates. There is a need, though, to cover costs up front for the GP and the operators involved in that project. And that's how including the labor that they spent for the last 2 months or so, or 3 months, putting the whole deal together and spending a bunch of time to do that, of course, as well. So looking at it from that angle, that structuring piece is where that comes in, and you have to structure it right to hit all those expenses correctly.
Yeah, that's a good point. Yeah, I'm not saying there should be no fees. I know my first syndication, I don't remember the exact dollars of my reserve, but I had something like $100,000 in checking. Okay, and this deal was me very intensive. Like I wasn't practicing law at the time. I didn't have a day job. So I was going to spend, this was my day job. So I was going to the big money guy, and I was raising 750K. And he said, well, what's this go towards? Part of it was down payment, CapEx, soft cost. Part of it was an acquisition fee for me for 100 grand. He goes, well, what do you need 100 grand for? I said, because you don't want me out there mowing grass on weekends to pay the bills. You don't want me
Yeah.
practicing law on weekends to pay my bills. I got bills. I got 100 in reserves. If you give me this 100, it gives me 200 reserves, and my burn rate's like 100 a year. That gives me 2 years where I don't have to look for another job. If I spend my energy on this deal in 2 years, it is going to work out really well for everybody. And it did, and we took it up about $5 million, which didn't always work that well, but we really crushed it. Added about $5 million of value. So I said, aren't you guys glad that I was working 6 days a week on this deal instead of
Right.
working 2.5 or 3 and tending bar at night and mowing grass on Saturdays? I was working on this deal on Saturdays, and I pushed the value up like crazy. And then the 100,000 was dropping the bucket because
Right.
I got 35% of the promote on that too. So I got paid a bigger chunk of the value add, which was incentivized, but I needed to have enough fees up front to I had a bookkeeper, I had an assistant, I had a property manager, some of these people that were helping me that was impacting my burn rate.
I think it's important because the operator has to live and still be able to focus on that project to make sure that they have compensation to be able to do the value add that they're putting in place in the first place. They shouldn't be working for free. And that's a dangerous factor because a lot of operators go to the next deal, to the next deal, to the next deal. And the asset management and the operations is way harder than raising the capital usually for these projects, and takes the actual real workload to make that happen. And so if you don't have any money on the back end for that to cover that, then the deal's just not going to perform because people aren't going to focus on it, right? So that's something that I look at when I'm looking at documents: is how is this structured? What's the compensation plan look like? And is it fair for all parties involved, right? So.
Yeah, no, good stuff. So let's talk about MHPs for a minute. So tell me, you've done a bunch of different asset classes. What do you like about MHP that you don't get in some of these other asset classes?
So from the start, I've done a lot of, I'll say, workforce and affordable housing in different markets around the country, where we were looking for the right rent to price ratios in markets that, you buy a house, for example, where it costs more to rebuild that house than you're buying it for, right? So you have a kind of a built-in floor of valuation there. It's very similar in the mobile home park space, where in my eyes, it's cheap to renovate these units and get them back up involved, and 50 grand or so or less to add a new unit to an empty slab in a park to add more units there. So and when you look at the comparisons, there's way more value add potential with a mobile home park than single family or a multifamily type building, because there's other revenue streams that get created. So again, adding new units to empty slabs, usually not available in multifamily type buildings, right?
Right.
You might have some multifamily buildings that can do utility recapture, but to the level on most mobile home parks, you actually sub-meter these houses out and actually push all utilities onto those tenants as a additional rent increase at that time. It takes a little time. You got to get that implemented, of course. But you also have a bunch of down units that a lot of mom and pop owners don't have the capital to go renovate down units and get them up and running and rent it again. You also have the capability of reselling these homes to homeowners with down payments, recapturing a big chunk of your renovation funds and putting it on seller financed paper, which then allows another cash flow stream, and usually at a higher interest rate and a higher profitability than just owning the rental in yourself, right? And so there's so many ways of adding value. In addition, you look at the affordability problem in the country as a whole, where we've seen rates go through the roof, we've seen property values go through the roof, and then you have mobile homes, which is the least costly home for a tenant or a home buyer in place. And so there's this built-in floor where multifamily will move down to mobile homes, single family will move down to mobile homes when they need a more affordable option. So you kind of have this built-in tenant base that always has interest in your project. And during distressful times in the economy, you even have more demand in those homes because you're actually able to go through and provide an affordable solution.
No, I agree. I mean, I talk about, economics 101 teaches us how supply and demand works. Is there
Right.
demand for affordable housing in the US? Yes, everywhere, massive demand. So what do? We bring more supply. Well, we can't really do it in this industry very much because the cities don't let you build more of these things. More parks are
Right.
demolished every year than are built. So if you already got your hands on a park, you know there's demand, you can bring supply in the vacant units and you'll get demand. There's sufficient demand to fill those vacant units in most markets, and you're not going to have the threat of somebody opening 500 doors across the street
Right.
because they just can't get it built. So economics 101 is kind of inconsistent or thrown out in the mobile home park space. You got to add value. You got to make it where the people want to live in the neighborhood. If you got a
Right.
dangerous property with a bunch of debris and a bunch of dangerous property, dangerous homes and trees and crappy streets and pit bulls running around, well, you got to fix it up to make it more desirable. Add some
Right.
amenities, clean it up, and then people want to live there. It's a
I've
no-brainer.
found
And
cleaning up the grounds, putting proper fencing, even gated access in a lot of ways, going through, which is not cheap, but doing these types of things and cleaning up the driveways, cleaning up all the exterior, and is super important from a new increase in rent standpoint to try to get those rents up and add that value to them. Just doing those things alone on the outside, people will be a lot happier. They feel safer. There's and sometimes you have some bad apples in these communities that you got to kick out, and you got to clean up parks just like you would a multifamily, or if you have buy a property with a tenant in there on a single family. All these things come with the potential of tenant issues, and so verifying these tenants, making sure you're taking quick action on disruptors and things like that is super important on an operational side.
yeah, for sure. I give this presentation for CCIM Institute, and and these are generally the people who are not that familiar with the mobile home park space. They see my class when you think essentials 101 for mobile home parks, and they show up maybe a retail broker or it may be a banker or somebody, so they don't have a lot of familiarity when they jump in. And I'll show them like this is a modern mobile home. On the inside, it's unbelievable. Outside, there's not a lot of character. They all look pretty similar. I'll be honest.
Right.
But on the inside, really nice looking home. And I say, look, this is a 16 wide by 76 feet long. That's 1,216 feet. In most markets, I can deliver this home for 75 cents a foot. So, 900 bucks a month, 900 to 950. And a similar sized class B apartment is going to be usually at least $1 a foot to rent it. So it can be $1,216. And I said, which one's nicer quality? No brainer. And by the way, on the mobile home, there's nobody above me, there's nobody below me, there's nobody on the other side of the wall. I got a grill, a parking space, a patio, a tree right outside my door.
Yes,
And by
your
the
own
way,
space. Right.
next to lot number 10, there's a playground and a covered picnic area. This is quality, affordable housing. And
I,
how much demand you have for that? A
I've
ton.
been trying to tell my wife for years that I want to go move to a tiny home in the middle of nowhere somewhere or something like that, because I'm like, get rid of the stuff. We don't need all this. Let's get out
Right.
of the city.
Minimalist. Yeah. I know my wife and I used to live in a really small home when we got married. And sometimes she's like, I kind of miss that. We got rooms we don't even go into now. I mean, I,
Yeah,
I
you're like,
put a
I don't need this
playroom,
room for my
I put a
stuff.
playroom in my basement. It's a big one. I got all kinds of crap in there, and my kids are playing in the kitchen. I'm like, guys, I don't want the gymnastics rings and bars and stuff in the kitchen. I don't want, they set up a restaurant. I'm like, we built a playroom in the basement. It's huge, and we put a window in there. I mean, all this stuff. Like they're like, we want to be up for action as that. So it's like we don't need this big a house. But it is what it is. First
That's
world
awesome.
problem, I guess.
Yeah, the kids definitely cause chaos in the house nonstop. So totally
I used
understand.
to work from home. Yeah, that didn't work well. I live 1 mile from the office. Like I live pretty darn close. But I gotta have my own little space. So
I close my office and I work from home now. My whole team works from home, and I use LED lights to make sure. Red means you can't come in, I'm recording or in a meeting, and green means party time. And they always rush in during party time, So
nice.
the
Wow, you
things
got
you
it
got to
figured
do when
out.
you. I mean, I'd rather work from home. Like we're real estate investors. We're supposed to be free. I don't want to go to an office every day, right?
Mm,
So that's the whole point is to
yeah.
have that freedom. I keep saying I'm going to go live in an RV on a mountain somewhere with my kids for a couple of weeks at a time, then doing podcasts and doing my workload from there.
Very nice. What other tips before we jump here? What other tips you got or tricks for mobile home parks or financial engineering, or you tell me?
So I think, just looking at the overall economy right now as a whole, and some important tips to kind of abide by, I think, when you're investing in real estate is we don't know what's going to happen with the overall economy, right? There's some black swan potential events out there, lots of changes that are happening politically and, financially across the board. We're not seeing any major delinquencies in the lending market at all, but we do have some very big commercial refinances that are needed to become over the next few years in the commercial space and the multifamily and retail and office space that could cause some financial distress for banks and stuff like that. I think time right now there's a lot of opportunity, and it's important to actually invest to take advantage of those inflation hedges. At the same time, have lower leverage ratios. Don't go crazy on borrowing money. Make sure that if there's a change in the market, if rents drop at all, then you're still in a good spot financially and you can weather that storm and you're not leveraging to the hilt, right? Being able to work with operators that I think are more conservative, that you agree with on how they're conservative in their assumptions is really, really important right now. Understanding the markets that you're investing in and just being cautious and smart about your investing. Doing your homework on these deals is everything. So if you don't know how to do your homework, ask the questions, find out ways that you can actually learn more and find other people that specialize in that space that can actually help you when you're trying to invest in a park on your own or investment on your own or with another operator that you're working with, right? So if they can't tell you what your break even is, or they can't tell you about every risk that is involved and how they've been able to mitigate that risk, then you probably shouldn't invest with that operator in the first place, right? So super important things to understand when you're investing with anybody else or in your own deals as well.
Yeah, good points. Yeah, on the risk piece, I just put together a pitch deck for a presentation I got coming up, and um, that was one of the things I put in there. Is like, here are the risks on this deal. Like there are always risks. If someone tells you they're not, they're wrong, right?
Right,
There's
they're
always
wrong.
risk, but then how do you mitigate them, right? Like this deal has a lagoon for a mobile home park lagoon. Well, that scares a lot of people, so that's risky. Well, how am I mitigating it? We already have a different lagoon property in the same city, so we already know that city, that county, that state, and we have a lagoon operator and that same lagoon operator is currently managing it for the seller. And then the
Nice.
other thing is, we inspected the lagoon, and I can't tell with my eyeballs, and I'm not an expert on lagoons, but I hired a guy that is, and he said the lagoon needs to be dumped. It hasn't been dumped in 50 years. It's full of sludge. What's going to cost you 150 grand? So, or 100 to 150. So what did I do? I got a $150,000 price concession from the seller. He wasn't able to refute it. He didn't dump it. I'm like, I can't just do this myself. We got to hire the lagoon guy. So there is a risk. It's still a risk. We've mitigated it. It's not zero, but it's not an unforeseen risk.
Right.
And I'm not, rose-colored glasses thinking, oh, it's going to be just fine. Like, no, it's going to be expensive to dump this thing, and we need to in order to increase and fulfill our business goals, which include adding occupancy, which means there'll be more people using the facilities, sending stuff to the lagoon.
What's awesome is that you now get to do a major value add by making the lagoon a lot nicer, and then all those units now increase in value because you did that, that service for that piece. Granted, there could be cost overruns. There could be, something unforeseen with any section of any deal you ever do, but being able to find ways of mitigating it, putting rehab buffers in place, getting concessions like this when there's an issue or something is the key to the whole thing. And if you don't have a quality operator, someone knows what they're doing like you do, then you can end up in a bad situation where someone didn't foresee an issue that came up, right? So that's the key with that experience, someone that has experience in mobile home parks that can actually do that for you and know what the heck those landmines can be, right? So
Yeah. Well, I appreciate it, Matt. Before we jump, where can people find you?
They can go to my website, MathewOwens.com, with one T in Matthew. I say my parents couldn't spell, so even though they're CPAs and engineers. So, but yeah, MathewOwens.com. And I have that 200-point due diligence checklist on there if you guys want it as well. It's free to download. You guys can use it. That's what we use when we're analyzing deals ourselves. So,
Well, I appreciate it, Matt. Great stuff.
thank you.
You've been listening to the Mobile Home Park Lawyer Podcast with Ferd Neiman. Ready to learn more? Go to www.themobilehomelawyer.com for free resources and materials to help you succeed. If you love the podcast, go to Apple Podcasts, give us your review, and subscribe today. Thank you for listening. Neither the Supreme Court of Missouri nor the Missouri Bar reviews nor approves certifying organizations or specialist designations. The choice of a lawyer is an important decision and should not be based solely upon advertisements.